In this video, I will reveal this month's biggest risers and fallers in the FTSE 100 and all the upcoming key dividend dates that you need to know about. This is not financial advice, so please do your own research. So who are the biggest risers in the FTSE 100? Up 7.7% is Severn Trent. This water company based in Coventry supplies services to 4.5 million households. Inflation stands at its highest level since 1992. This will increase costs for almost all businesses. Firms that cannot pass on their rapidly rising costs to customers in the form of higher prices will inevitably experience squeezed margins and lower profits, with gloomy consequences for their share price. But companies such as Water Services and Severn Trent could become increasingly attractive. The dividend yield is 3.2%. Up 8.9% is United Utilities. They are the UK's largest listed water company, and just like Severn Trent, the price it charges is linked to inflation. Water is a basic necessity and 70% of its customers pay by direct debit, so there is a high certainty that money will be collected. Utility companies can be viewed as a safe haven during periods of stock market volatility. Dividend yield is 3.7%. At number 3, up 10.2% is SSE. This company has benefited from soaring energy prices recently, and this has resulted in SSE upgrading its full-year earnings projection. Russia's invasion of Ukraine has sent electricity prices to record highs. SSE has also benefited from a revival in renewable energy. The company intends to invest about £2 billion this year in low-carbon projects. Dividend yield is 4.5%. At number 2, up 10.7% is GSK. Bumper sales of COVID-19 antibody treatment and a bounce back in demand for its shingles vaccine has helped the drug maker beat expectations in the first quarter. Dividend yield is 2.9%. And just before I reveal this month's highest riser, you may want to consider subscribing so you don't miss out on any future market updates. And the highest climber this month, up 13.6%, is Reckitt Benckiser. The company recently received a bullish update from analysts at Barclays. Over-the-counter sales this quarter were very impressive, driven by a strong flu season in comparison to a year ago. Their cold and flu treatment has seen soaring sales recently. Dividend yield is 2.8%. And now for the FTSE 100's biggest fallers this month. At number 5, down 13.7%, is Ocado. Ocado has partnered with the likes of Marks & Spencer's and Waitrose, but with rising price inflation, people tend to seek more budget alternatives and head for a cheaper competitor. Customers are also reverting to pre-pandemic behaviour and are more likely to go out to the supermarket rather than ordering online. Ocado don't currently pay a dividend. At number 4, down 15.2%, is Barclays. It's been a difficult year for the bank, down 26% in the past 6 months and 28% over the last 5 years. They are still recovering from a massive trading error uncovered in its US arm, when £12 billion of financial products were mistakenly sold. Buying back the assets at a higher price will cost the bank around £450 million. And it also faces the spectre of possible regulatory fines. However, despite this, Barclays' financial results look fairly healthy, and investors will be pleased to note a rise in its dividends per share. The dividend yield is 4.2%. At number 3, down 18.8%, is Asheton Group. Asheton is the second largest rental equipment group in North America, with a further valuable franchise in its UK home market. Recent post-pandemic cash flow pressures have weighed heavily on the share price. Dividend yield is 1.2%. At number 2, down 20%, is Aveva Group. Aveva is an industrial software company, and its revenue has been hit from sanctions on Russia. Wage inflation and increased travel costs are expected to take a toll. Dividend yield is 1.9%. And the biggest faller this month, down 25.2%, is Rolls-Royce. The shares have fallen heavily in 2022 and now trade as a penny stock. The pandemic and travel restrictions have hurt flight demand badly. Engines need to be serviced less frequently, leading to lower revenues at Rolls-Royce. But you might see this as a bargain and think that the demand for civil aviation is only going to get better from now on. You might also feel that with the current geopolitical climate at the moment, defence revenues will increase further in the coming years. I've been buying Rolls-Royce recently at these lower prices, but tread carefully. I don't have a crystal ball, and developing new engines which are less reliant on fossil fuels is a costly business indeed. No dividend is being paid at the moment. And now for the ex-dividend dates. In May, there are 9 FTSE 100 companies going ex-div. If you hold the shares before the ex-div date, you're entitled to the dividend and it will be paid to you on the payment date. As an example, the first on the list is Croda International, which goes ex-dividend on the 5th of May. So if you hold shares in Croda before this date, then you'll receive 56.5 pence for every share held, and this will be paid to you on the 6th of June. Admiral Group also goes ex-div on the 5th of May. The insurance company Aveva goes on the 16th, and this one is a special consolidation dividend. 5 companies go on the 19th of May, and finally Intertek goes on the 26th of May. And now for the payment dates in May. More than 30 companies will pay out. At the beginning of the month, we have the likes of British American Tobacco on the 4th of May, paying just over 54 pence a share, and the publisher Pearson paying out on the 6th. In the middle of the month, we have the likes of Standard Chartered, Antofagasta, Taylor Wimpey and Lloyds. And in the latter half of the month, we have the likes of Aviva, Glencore, ITV and Rightmove. And just for interest, here are the highest yields currently in the FTSE 100. The average dividend yield for the whole index is currently 3.6%. I prefer to buy companies with yields between 3 and 6%. There is always a risk that a dividend with a very high yield could be cut, so always do your own research before buying. Please give this video a like if you found it useful. See you next time and happy investing.